Hello there, Mike Love, eXp Realty here. Thanks for joining me for the February 2023 housing market update. So let's talk about interest rates. Mortgage rates are trending downward overall. Since November, they've dropped approximately 1 full point from roughly 7% to 6% as of the beginning of February. In the last few weeks, we've seen a slight rise to about 6.3% on the 30-year fixed rate. As inflation continues to decrease, mortgage rates will follow. Weak buyer demand in November has improved the beginning of this year as rates have dropped below 7%. Now, with rates below 6.5%, demand has started to pick back up again, and when rates make it to below 6%, we expect strong buyer demand to return. The biggest challenge we face going into spring is not interest rates, but inventory. It's still a seller's market. Nationally, the number of active listings is on the rise. However, it's below previous years. Here, the red line represents new listings in 2022. Many people that were calling for a crash had made the case that listings would continue to climb as the market slowed. Price is always determined by supply and demand, so this predicted crash should have resulted in lower prices. But for many parts of the country, the lower inventory has caused the exact opposite, continued price appreciation. Current data from the Multiple Listing Service locally shows that in Summit County, we've seen an increase in number of listings from this time last year. However, the average sales price remains about flat. So Mike Simonson sees surprising demand indicators and home price resiliency. We are inside a turn in the housing market, so put on your seatbelt. Banks have started to revise their pricing forecasts. Goldman Sachs started the year at minus 6.1%, and not even a month later revised it to minus 2.4%. Headlines do more to terrify than clarify. We all know that fear drives ratings. A recent survey from NerdWallet indicates that 67% of Americans think a housing market crash is imminent within the next 3 years. Here are some factually true headlines that may lead you to believe it. Well, let's break down the data. In 2022, foreclosures were up 115% from the prior year, but down 34% from 2019 pre-pandemic levels. U.S. foreclosure activity has doubled over the last year, but again, remains below pre-pandemic levels. With the rise in home equity, the government programs, and the changes in lending practices, most importantly, many people have been able to avoid foreclosure this time around. Bill McBride from Calculated Risk says, the distressed sales during the housing bust led to cascading price declines, and that will not happen this year. In the past 2 weeks, we've seen the return of multiple offers on some updated and move-in ready homes here in our local market. Unlike recent years, most of those offers still included home inspections, other contingencies, and some with seller-paid closing costs. As interest rates continue to decline and peak selling season starts to warm up, I expect to see more multiple offers with fewer inspections and fewer other contingencies. So what kind of market do you want to compete in? It's likely to look a lot different this summer. So if you're looking at buying, selling, or both this year, give us a call. Let's talk about a strategy that best fits your needs. Thanks for watching. Have a great one.